Alright guys, I am back for another live stream. Now I'm not gonna stay here for long. I'm shooting for an hour, might be less. Depends on what I could come up with here. Of course, today was a surprising day for me. I thought Bitcoin would have another month to go, obviously. My thought is that they're gonna try to run it up on Christmas or something of that sort, right? Now the news is on Bitcoin is that BlackRock has been buying it. BlackRock, you know who BlackRock is, and Bitcoin. So apparently they're trying to get the spot ETF going and they are buying in, right? Now, whether that's fake news or just a fake pump, I don't know. You know, these type of things happened before. And of course, like these people has been, you know, the narrative 4 years ago or even before the FTX was that Bitcoin is just, you know, magic money and all that stuff, and it's, you know, greater fool theory type thing, right? That it has no value and all that stuff. But now, because BlackRock is in it, everybody is like, oh, this is the biggest opportunity, or this is the smartest thing to do, right? My spiel about that is that, you know, they knew all along that cryptocurrency is here to stay. Cryptocurrency is the future. Cryptocurrency has some use case here. Now, I don't know what that use case is, but Gamestop figure a way to take, you know, well, hopefully, we think that GameStop's going to do that. Well, I think that GameStop's going to position themselves so well to try to capture this. But before Ethereum could go any bigger, I think that they're going to try to go after Ethereum first, because, and again, like, we have no clarity up until this point in time. We have no clarity for Ethereum, right? Because Ethereum could be deemed as an unregistered security. And for those of you who doesn't know what that is, it just means that when you are buying into the security, like GameStop, for example, is a security because you are expecting Ryan Cohen, the organization, as a GameStop to make money for you. That's why you buy GameStop shares as a security in the promise that you might get some money back from GameStop, right? Because GameStop is a business, is an entity, so that is a security. Ethereum is the same way, right? The reason why crypto is unregulated is because there's no clarity to that. This regulator doesn't know or doesn't even care, or the reason why they don't go after it is because, you know, people who are influential, who are the elite, is probably already accumulate a whole bunch of Ethereum already because they believe in the network as well, allegedly, right? Of course, I'm speculating here. I'm not saying that you know, I know all these people, but, you know, it's just me following what Bitcoin is, what the blockchain network is. It is a technology for the future. I just don't know when it's going to take off, but it seems like, you know, because of the tension in the Middle East right now, I feel like they're going to try to use that distraction to distract the world from not taking advantage of cryptocurrency, right? And of course, they already planted hold on, let me see. They already planted the seed that cryptocurrency is scamming, you know, is scamming people, or just full of scammers and all that stuff because of the FTX, Celsius, which I am affected by that as well because I have some crypto in Celsius when it went down. Currently, the lawsuit for Celsius is a separate thing. So if you have not been in that lawsuit, I'm not gonna go into this because, you know, it's not related to to GameStop right now. But anyway, so yeah, I just want to mention it real quick. And of course, with the news, Bitcoin went berserk, right? How far it's going to run? Nobody knows. Of course, it's been suppressed for a long time. So it could run up until, let's see, what is the next resistance right here? Again, this is just me amateurly looking for the next resistance. So the next resistance would be this, the most simple thing. I'm not saying it's going to go up to that and then turn around. It could be, if you look at the previous cycle right here, not a technical person at all. I'm just doing this amateurly, okay? So please don't take any trade based on this. But if you want to look at the different cycle here, and you look at the top, this is the last bull run down to here. Whoop, actually, sorry. I'm trying to measure this, okay? So to this top right here, see that little top? So from that measuring down, it's 30%, right? So it could say that because of this enthusiasm, it could be, down from, let's see, right here. Right there, so 13% from the top to the next second top, I would say, and then to the third top, to the middle of this, right? So you could extrapolate from that, saying that this might be the middle right here, or this, but I think it's the middle. So if you measure from here to here, how many years is that? From 2018 to, I would say that's a year and a half, right? So from the all-time high to the middle all-time high right here, a year and a half. So if you do the same here, so from here to here, a year and a half. So this might be that next second run right here. So we already determined that was 30%, right? From here to here is 30%. So the all-time high right here to here. So if it's 30%, so it's gonna come out to be that. So it's gonna run. I'm not saying it's gonna be hitting the same exact fractal here, whatever they want to tell you. But if Bitcoin is based on mathematical, equation and whatnot, this is going to give you an idea of how far it's going to go before they smacked it back down again. So, again, from here to here, it's around a year and a half, okay? From here to here, last cycle, it's around a year and a half. Okay? So what is my conclusion? My conclusion is that it's going to try to come up here as close as possible, right? If you buy into it now, make sure you try to, well, if I was you, I would try to sell it up here, and then sell it, and then wait for a second dip, and then try to buy in, slowly again. I don't know if this is the bull run of a lifetime here. I think they're gonna try to wait, but I might be wrong. I might just blast through this and then take off to the races again. Who knows? It can happen. I've seen Bitcoin happen. That happened to Bitcoin before. But anyway, so since I'm gonna start this video right now, let's see what I was thinking. Okay, so I have two things to talk in this live stream here. to talk about in this live stream is the correlation of Bitcoin running versus GameStop, right? Because if I were to look at the relationship between them, it's kind of uncanny. So Bitcoin went berserk right here, right? It's kind of like what it is now. Boom, right? And then this is when Ryan Cohen got in to GameStop. This is when the letter was written to the board of directors. And, you know, GameStop, the yellow here is GameStop. GameStop does this. Boom, right? Now, I'm not saying that Bitcoin has some relationship here. But I think that at some point, if you look at the... Hold on, let me see. This is an hour. I want to see a daily candle here. That is so weird. I thought I had a better relationship here. Hold on, you guys. I'm trying to find a time frame that we could see the correlation here a little bit better. Okay. So this is after the run already. Obviously, we know that GameStop does this thing, dip, and then does this sporadic, run up, right? And there are periods where we see GameStop just completely dumped, and then Bitcoin completely takes off, right? But then at some point, Bitcoin comes down, and then GameStop kind of go back up, right? You see the relationship there? So this one, GameStop comes down, and there you go. An inverse relationship, right? Bitcoin went up. Bitcoin went down, right? When it's up, kind of like right here, GameStop went down. And then immediately after, it went up, back up. So what I'm trying to say is that anytime Bitcoin went up, a minute later, when I said a minute, if you look at the date right here, so September 28 right here, 2021. Let's see, September 20, a month later, 1 month later, GameStop went up with it. Bitcoin went down, boom, 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 boom. Okay. Cascading down, and kind of follow what GameStop does. But anytime, if you look at right here, from here to here is 26th of February right here. What is the bottom here? 30th. Oh no, 13th of March. So about a month apart, GameStop would start to go up as well. So it's kind of meet that run right there. And then when it dumped the same time right here. So the bottom of Bitcoin went down here. The 15th of June went up. Kind of consolidate here. Right there. But then, of course, like this little shenanigan right here, it seems a bit forced, right? So the correlation is not there anymore. But then it kind of trade, you see, kind of like synced up again. So Bitcoin went up. GameStop went up as well with it. So then if you see this little thing right here, see, Bitcoin went up. It's along with GameStop as well. Now, I'm seeing there are periods of it kind of diverting. You see that there's a little diversion right here. Dun 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 dun, right? So when GameStop went down, Bitcoin stays up, right? And this is a daily candle, by the way, so it's a bit hard for people to see here, but I could see there's a diversion happening again, right? So when that diversion happened, what do we see here? You see this? That drop right here? I bet you anything, this run kind of similar to this one right here. If you have this, the right time frame. Right here. So, what am I trying to tell you? I don't know what I'm trying to tell you guys here. But, no, so what I was trying to say is that there's an inverse correlation, right? So, anytime there's a inverse relationship, GameStop's going to catch up with it. Right, but you could do that with any stock, honestly. Correlation doesn't have to kind of matched up with that, but since GameStop is involved in blockchain at one point, I bet you anything, it's kind of trace what crypto is doing in general. That's what I'm trying to tell you guys right here. So let me grab a drink real quick. But anyway, so if it makes sense to you, what I'm trying to say is that when you see Bitcoin run, GameStop tend to follow suit. Okay, just historical data here. Okay, so that's what I have for this Bitcoin thing here. And of course, Stellar Lumen, I'm looking for that one as well. Own a bunch. And then I told you about XRP as well. Doing well today. Bitcoin is doing well. That's good. Ethereum is up there as well. I bet you anything Loopring is also on there. I'm not quite sure. Right here. Don't know why they won't put it there. Maybe I just didn't see it myself. But yeah, Loopring is, just so you know, for those who don't know, GameStop partnered up with Loopring a while back to build the NFT marketplace with Loopring. Now, Loopring is a layer 2 Ethereum, network that, allow you to transact with a low fee. And instead of using the Ethereum network and cost a whole bunch of money, you use Loopring on a layer 2, and then if you want to transfer back to layer 1, you just have to pay a small fee. Whatever the fee at the time is, you would pay that one, right? But as far as like trade in and out of token from token to another, you will only suffer a small fee in terms of either Loopring or Ethereum on layer 2. Okay, so that's what it is. And also, I bet you anything. Okay, that I don't know why I said that all the time. I bet you anything. Loopring's gonna benefit from this run as well, right? And this is where the GameStop pump right here has nothing to do with the second bull run or anything. But yeah, Loopring tend to kind of trade sideways for a while until it's too late for people to get in, and then boom, it just does that thing, right? Because again, like, it's a very small cap. Like right now, it's only $11 million of volume, but the whole market cap of this particular coin or network is only $250 million. So it doesn't take much to cause this run right here. So the network is becoming a lot more and more available to the people who have not been on the network. Now, I meant, NFT before, just to test out myself, to see how easy it is to use Loopring, and it was pretty easy. I'm not an expert on this at all. I'm just like dabbling, just to know enough to know what the network is able to do, right? And very fast, right? So you don't have to wait for your funds and stuff like that. But again, it's still a kind of like under that microscope of hey, it's not regulated. Hey, there's no clear rule, laws, and all that stuff to kind of build a business on. And this is why I think GameStop is stuck in limbo right now for the NFT marketplace. In particular, I'm not talking about the whole company here. I'm just talking about the NFT marketplace. Hold on. GameStop. Alright. So this is why I think this bull run is going to showcase NFT marketplace. Okay, GameStop is going to be, one of the names that people can't keep out of their mouth, right? To me, they're positioning themselves well for this. I guess I would say a good news. When BlackRock moves into a asset class, you better pay attention to those type of movement, right? Because they don't make these decisions lightly. Now, there's a high demand in cryptocurrency, obviously, right? Because younger people now are turning into 30-year-old, 40-year-old, 50-year-olds. So those 30, 40, 50 are the biggest spender, right? The boomer, obviously, they're, already, kind of old enough already, retiring, so they're not as much, even though they have most asset, they don't have the appetite to spend, right? But as far as like asset class, the boomer really like gold and all that stuff. And so the new generation is coming in who's getting older, in their 40, 50, or even 60, right, are moving into this asset class. So BlackRock make a right decision here because they know that to capture the best asset class is to be in Bitcoin right now, right? And I think this is why there's a concerted effort to kind of slow the industry down by, kind of let FTX to be this Trojan horse, I would say, on crypto. And I think the plan was to kind of capture most of the market cap and then crash it, right? But they didn't foresee that Twitter was going to do that for them first. And so we kind of, to me, I know, like, I have this conspiracy mind here where I think that the FTX thing was a setup in the beginning, and maybe because now I don't know if you guys know that there is a coin being mint that was GME on FTX. GameStop Finance, GameStop tokenized FTX here. GameStop tokenized stocks, FTX. Where is it now? You don't see any data on it anymore, right? And nobody really trying to investigate who mint this particular coin, right? And I bet you anything, if you trace that origin, you probably find out who behind the FTX, right? And again, this is like the connect the dot things, and I wish Morans could do that. But again, like I feel like the ability for me to do this is muddled because I'm scattered brain. I feel like I don't organize my thought as well as Moran's. That's why I want him to kind of do it. But again, Moran's, if you watch this, no big deal. You don't have to. But this tokenized stock on FTX was pegged to GameStop price at that time. And so people were buying into it, thinking that it's it's the way to make the shorts, But I bet you anything, it's probably the short who's trying to take that money and kind of take off the volume from the real stock on the market back then. And so, again, this type of things, it's stranger than, the truth is stranger than fiction, but it's very strange that you can't even see the trace of it anymore. I bet like people who are technical, highly technical, probably would figure out how to get back that data. But anyway, I digress. Let's forget about that tokenized stock, huh? Because they want us to forget about it, right? So that's all I have for this one, but I wanted to mention one other thing that I noticed today, and I might spend some time on it, right? Now, one of the things that I saw here, let me play it for you, and we'll be back and discuss it later, okay?
antitrust. I mean, filing suits, losing suits at a rate that really is kind of unprecedented in the history of the DOJ. So, I think that their legal action is less worrisome really than ever before in terms of their success rate. The cases themselves, I think, are certainly debatable in some instances, particularly with Amazon. So I think a couple of things will happen. One is they could succeed. There could be breakups. That's probably equity positive.
Wait, back up 1 second. Equity
Yeah.
positive if they were forced to break up Amazon?
Yes. I mean, I think that you've got, some businesses that if separated, the market would love to own. And I think the multiple you could get for web services, the multiple you could get for what they're doing with e-commerce and their advantaged position there, and what's happening with them on the advertising front, those are businesses that investors we think would like to own.
So even if the company loses, you think shareholders win?
I think that that's the base case, yeah, is that a breakup is good for equity value. So it's
But
kind of
that's not a
hedging.
base case. I mean, that's a sort of big speculation, no?
That is our base case when we look at this litigation is that the stocks, are not going to be penalized, would probably benefit in a breakup. I don't believe that in this case that in Amazon that the Justice Department's going to prevail. I think Amazon's got a strong case. I think the retail market is very competitive. I think it's very hard for them to argue that Amazon doesn't compete with Walmart, doesn't compete with Target, and they have to do that to really argue that they have monopoly power. And I think it's going to be difficult.
If you think that these companies, that this company, that Amazon would actually do better if it were to split up for the shareholders, do you think that puts pressure on the company to do that eventually? Or do they not have to do it because Jeff Bezos is going to control too much and it's not what he or other top managers would want, including Andy Jassy?
Well, look, I think that if we're wrong and if Amazon's fundamentals, were challenged like we're seeing at Disney, then they are, susceptible to a breakup. But I don't think that that's what's happening right now. That's really a completely different situation.
Barton, what would be something that would potentially concern you on any of these companies when you're listening on the earnings call?
Well, I think that obviously the worry point right now is the macro backdrop. And I think part of the skittishness has been, what's really happening with the economy. I think, everything that we're seeing is, the economy's okay. And that should be a great backdrop for digital ad leaders that are taking share in the ad market. But interest rates, they start to bite, things start to weaken. It's going to be a more difficult period. That's why I'd like to buy quality companies with multiples that you can defend, with margins that are expanding. I think that is comfort, if you're facing potentially more difficult times in the future.
Alright, guys, so let's do this. Alright, of course. So he was talking about Pinterest, right? So the reason why that one caught my eyes, my attention, is because why would they want you to buy into these company, right? Now he mentioned Alphabet, right? Now Alphabet is Google. They have an enormous amount of market cap already. Now, I'm not saying this company are in trouble here. Not at all. But they're too big. How much more do you think Google's going to grow into? $10 trillion? Can you 10x your money from here? Parking your money here? My guess is not. $10 trillion. Well, even at 10 trillion, it's only 5x, right? Now, I know, U.S. government is going up in loan, right? When you have loan, when you have all of that stuff, you expand a whole bunch of, BS company that shouldn't even be, big companies like this going to take most of those market share. I get that. But eventually they're going to get too big to the point where they can't grow anymore. And in my opinion, of course, I'm not an expert at all. I'm just saying that, in my opinion, you're not going to grow Google to a $10 trillion market cap, right? At least it's not going to be like immediately anyway. And so why are they pushing Alphabet to you, right? When you have this type of float right here, 10 billion shares outstanding. And look at the inside ownership, less than 1%. I think it's worse than AMC at this point. But it's so much, like there's so much shares outstanding that it's just ridiculous. Right? Now, I'm not saying they're in trouble, because they do make a lot of money. You know, the revenue is this, gross profit is this, net income is $60 billion a year, right? Earnings per share sorry, is $4.73. Look at the book value, meaning market cap divided by shareholder equity. It's 4. It's 6.4, right? 6.4 meaning 6 times its shareholder equity. So, is that a good thing? It's not the worst thing in the world. But wouldn't you want it to be a little bit lower? You know? The lower the better, right? Because again, you have more shareholder equity than the market capitalization. As far as cash on hand, you know, they have a lot of cash on hand to conduct its day-to-day business and all that stuff. Again, everything is positive, okay? Working capital, $91 billion. That's a lot. Book value per share is $21. So they have a solid balance sheet. I'm not knocking that at all. Operating cash flow positive. That's great. Profit margins right here. You get profit margin. This is after everything. 21%. So that's stellar, right? Very good. Look at the tax, that effective tax rate, meaning that this is what they're paying every single year, right here, $12 billion. So for people who tell you that this company, and this is off topic, I'm not talking about, like I've never had this, I've never said this on my live stream before. But for those of you who thinks that those corporations are paying more in taxes, it's bull. It's BS. Look at their balance sheets every single year. I'll show you who pays the less tax. And you know, on the news, you always hear about, oh, these corporations are doing terrible because they're paying 30% in tax. Some of them, 37%, that's what they said, that the US has the highest. That's bull. That's bull. Look at what they're paying. Look at what actually paying. Right? Now, regular income people like you and I, we pay our income based on our gross income, okay? Gross income is right here. Toby, outside. 1 second. Sorry, my dog is going crazy. All of a sudden, he was quiet for a minute there. But anyway, so regular people like us, we pay our tax based on our gross income, right? So let's say they are paying 17%, right? So on the gross income, it should come out to be a lot higher, just under 17%. And are you paying 17% in income tax? Good luck. Try to get that. You'll be the luckiest person in the world, in the US anyway. So the gross income, if they are paying 17% on the gross income, 1 second, I'm getting distracted by my dog, but let me do this. Oh, sorry. Actually, it's time. We do this again. So I'm doing the gross income. I'm trying to figure out how many 17%. How much is 17% on the gross income? That is $27 billion. Okay. If corporation actually pay what they're supposed to be paying, it should be twice on the 17%. Okay. So what is the regular human being like you and I when you're working? What is your effective tax rate? I bet you anything, it's probably close to 20%. Okay? Now, I haven't done it myself. I might be wrong, but close to 20%. But guess what? They get to pay tax on the net income instead of gross income. Okay, let me get my dog out quick and I will be right back. Sorry about that. Let me put some music for you guys. Whoops. You know what? I just realized the music was so low. You might not even hear it. I'm sorry, you guys. All right. So as I was saying, if corporation pay more taxes than us, it would be, more than what they're actually paying. And even worse, they're paying on their net income, okay? Their net income, not gross income. We pay on our gross income. So the difference between the net income and gross income is this. So a gross income would be everything that you got. Like, let's say you get paid $20 an hour or $30 an hour, right? And then you do the math, how many hours that you make times the amount that you make per hours, right? Those are gross. Net would be, okay, so you take the gross and then you pay your water bill, your electricity, your whatever, right? On top of that. Sorry. And then when you pay all of that, you subtract it from your gross income, right? I hope that makes sense. So when when you subtract it from your growth income, that would be the net. Whatever you have leftovers at the end, that would be your net income, right? And so, if that's the case, we would have so much money to to go out and spend, right? But we have to pay tax on that. I'm not complaining. Of course, everybody has to pay tax. I love to pay tax, but at least be fair about it, right? If you're telling the public that corporations pay more taxes, it better be true, and none of this is going to happen. But some organization, some company pay less than other. So I'll show you later. But anyway, back to this particular company. I'm not saying that it's not going to go up from here. I'm saying that for you to 10x your money in this company is unlikely. Okay? That's all I'm saying. Alright, so this is Amazon. If you look at this, I have this metric that I go by, right? And usually, if I see the inside ownership owning more than 10% or even 9% here. 1 second, you guys. I'm sorry.
Be educated, but I'm so frustrated. Hello to my loneliness. I guess that ignorance is bliss. Take me back to before I knew. Rewind, take it out of cue. Innocence can be a young man's game. Signed up for the hall of shame. I wish I knew how much I miss. Stay up, I feel so outdated. How can we look the other way? Sun is out, but the sky is gray. What would happen if I took a chance? It's always hard at first glance. I don't wanna, but I know I gotta do it. The truth is hard to swallow, I think I'll chew it.
about that. My dogs. Goodness. As I was saying, so let's go back. This is Amazon. So the one metric that I usually use is this one, right? Share insider ownership. Okay, whoever wants to own it, and whether they're owning it or not. No, sorry, I'm just babbling here. All right, so this one that they push, right? We have a segment that is coming, and they're telling you to buy Amazon Alphabet, right? We just looked at the Alphabet a minute ago, and the same type of deal, right? This big company, they always push it to you. Why? Because look at this, 60% institutional ownership. Coming back again. Goodness. Anyway, so this is Amazon, right? So $1 trillion, the same type of deal. If you want to 5x this investment, this company would have to be $10 trillion. Is it likely to go to $10 trillion company? I don't know. I can't see that happening, right? Unless the government give them, a contract to do more. I just don't see it happening. I might be wrong. Again, look, they have a whole bunch of money. Look, they have gross profit right here versus net income. Okay? So, of course, people want you to buy it. It's a strong buy, right? Even in the midst of the antitrust law, the CFTC is suing it as a monopoly, and just like the anchor was saying, it's like, oh, wait a minute, and the guy was like, well, even this lawsuit is going to be beneficial for the equity holder. That is not, I don't know. Again, I can't say it myself. I feel like, I don't feel qualified to say it for sure, but that cannot be good. Yes, maybe if you were to own a certain sector of that breakup, and I don't even know what it looks like if the government were to break them up. What would that look like? Does the equity holder have the choice to pick what sector they want to hold as a company, like the web services business type of thing, right? Do we have a choice? If I were to buy into this particular stock before the split, and then the split happened, what would happen to my equity, right? So to me, that seems dangerous, right? If this thing happens to Gamestop, do you think they're going to say the same thing? They're going to bring out people to talk positively about Gamestop? I doubt it. But anyway, so gross income. So there you go. We would have been taxed on this one right here. And then the rest, you get to pay your electricity bill, your whatever, right? Now, this is concerning to me. It's not an immediate concern, obviously. Look at the debt, the amount of debt. Look at the cash, right? So if they were to kind of subtract the two, you get negative $74 billion. Is that a good thing? Look at the working capital. Negative $7 billion, meaning that they need cash quick. They don't have current asset. They have less current asset than current liability. So is it going to go out of business immediately? I don't think so. But it needs cash quick. And they are going to go to shareholder equity. Okay, so quick ratio, obviously, look right here. We want it to be more than 1. And then current ratio is also should be more than 1. But it's not too bad. Holy stop. Outside now. Like a spoiled little thing. Sorry, you guys. But if you look at the tax, look at the effective tax rate, right? 4%, you guys. This is ridiculous, right? They make billions of dollars, but they pay 4% in taxes. Now, I might not know something here. Toby, stop. Outside now. Sorry, you guys. This live stream is amazing. Now, I just want to show you like these type of company that they want to push right in front of you, right? Anytime they want to push something, I implore you to do your own research here. Again, they have enough revenue. Look, $500 billion revenue. I get that, but they have so much debt. I understand that they are a monopoly. Obviously, they could do this, like operate at a very low, have massive amount of asset being held. Anyway, I'm gonna end this pretty soon, you guys. I'm sorry, the dog is just too distracted for me. So again, I'm not saying that this company is gonna go bankrupt anytime soon. Of course not. That's not what I'm saying. What I'm saying here is that for you to 10x your money here, this company has to be more than $10 trillion, which is unlikely, right? So this is Amazon, and of course, I hate the fact that they only pay 4% in taxes. Regular people like us pay 4% in taxes. Imagine how much money we would have at the end of the day to do anything we wanted to. But these people have made so many people rich that are at the top right here, the 1%, and they get to use this money to bribe the politician and then even making them more money, and then the working class make less. So that's what pissed me off. And then on top of that, you have the media try to give you a false impression that corporate America actually pay more taxes than regular working class like us, right? Okay, so let's go to Pinterest. Sorry about my dog. He's kind of going away right now. So hopefully I would have the chance to finish up this live stream a little bit better. So, all right. Let's see. All right, so this is Pinterest, right? And of course, the guy wanted you to kind of take a look at this company, especially it was kind of emphasizing that it's, it might be a good time to buy since it's been down with the market. Toby, come on. Bad. No, outside. Out now. Anyway, so they're telling you it's been down, so therefore you should buy in right now, right? I don't know anything about this company. Obviously, we're taking a look at it right now. But one thing, cause of concern, the main cause of concern is this. Look at this. 1% in inside ownership. Toby, come on. Outside. Stay. But anyway, so, 1% inside ownership, and of course, institution, 93%. Why are they pushing you to buy this? Because they own 90% of it. They want to load it on to you. So, the consensus is to buy, obviously, and they're saying that it might go up 18% from here. Okay, let's take a look at what's the stat is. Let's see, P ratio is 25. That's high, right? 43 or 48% of cash flow to price. Come on. let's see. Look at this return on equity, negative 9%. Okay, that might not be bad, but that's not good either, right? Positive cash flow, which is fine. Toby, stop. Sorry, you guys. Okay, let me try to finish this up before. Negative tax. How could that be? You're doing business and then you get a tax refund. What? Gross margin. 1 second, you guys. 1 second. I am so sorry. Okay, let me play music for you. Okay. Sorry, you guys. Man. I thought it would be like sleeping already, right? Okay, so this is Pinterest. Let's continue. Yeah, negative tax. What's going on here? Profit margin down 10% in the negative. So why are they trying to push this company in front of you, you guys? So I don't know. My conclusion is this again. This is not too bad. I'm not saying it's a bad company. I don't know anything about this company. I don't know how they make money. But knowing that they are, losing money as well here, perhaps the profit margin right here of 75 is too high to pass it up, right? Because when you have this type of margin, it's very attractive to them. But it seems like they have a whole bunch of debt here. A lot of cash on hand, which is not too bad. So they have enough to operate day to day. I guess it's not a problem that they have that much debt, but if you look at the ratio, debt to equity, that's pretty low, lower than actually GameStop. So that's probably a buying point for them, to push it out for you, that it makes sense. Quick ratio, wow, that's, 8. 1 is good, 8 is excellent, that's good. Let's see. Okay, so what's going on with this company? I don't understand this. So let's take a look at it a little bit further. So income is 2.8. It seems like 2.8 is their income. Gross profit is right here. Net income, why are they down so much? 200. Okay. Is it because they're loading on debt more? Expenses, growth, cash flow positive, that's promising, but they used to have double. It's going downhill. Profit margin right here. Cash flow is actually positive, but profit margin is down 10% this quarter. So what's going on within these 2 years? Okay, so debt, it seems like they did try to pay it down. Here, common stock. The shareholder equity went down by $400 million from the last trailing 12. So they do have some cash to go off of, but why some of those is still negative? Puzzling to me. So they repurchase share. I think that's why. Share buyback? So why is it so high? Like they spend $700 million on share buyback? Is that the same playbook as a private equity? Morans, I need your help. I think so. Yeah, I think that's what it's going. This is what is going on. I bet you anything, if you look at the SEC filing, you're gonna see the share buyback. Okay, so they aggressively repurchased their share back in order to pump the stock up. But they are depleting their cash on hand, you guys. So, I mean, they still have $2 billion left here, cash on hand. I don't know what the next plan is, but at least the shareholder equity is still in the positive. Book value is around $4 a share. So if you do that math, of course, we all, if compared to GameStop is better. But they do have a lot of profit margin. That's pretty promising. However, I wouldn't touch this, it's tough to say. Of course, like that little dip right here, it's kind of traumatizing for most people. But again, like this type of run, it seems private equity type of run here, right? So I would take a look at it a lot more than now, if you want to buy into it, right? Again, that was Pinterest, and these guys are pushing it right in front of you. Meta. Now, Meta is close to $1 trillion market cap, $800 billion. And, it's been running back up. If you look at the chart right here, you could see that in the last year or so, one month candle, it went straight up, right? Year on date, the lady was saying it's around 100 something %. So I don't know how much will it run. Can it run up to the second here and then drop right back down? Because anytime you see this type of thing, you don't want to be in it. It's almost like a meme stock here, right? Meme stock. I hate to use that word, but it's kind of like that. So of course the forecast is strong buy. They want you to buy into this one. Low 200, high is 333. Right there. So who's saying this? Wells Fargo, JP Morgan, of course. Why do they do that? Well, I bet you anything, they hold most of it. See, 78% of it. 2.2 billion shares outstanding, and then of course insider ownership nowhere to be seen, less than 1%. So that's embarrassing, right? But of course they want you to buy this type of stock because no insider is owning this. Okay, so that's that. And if you look at the PE ratio, of course it's 4. These people, again, this is overpriced, you guys, and it's not a good stock. And think about the advertisement aspect of it too. So if retail don't have money, or a corporation has been struggling to make revenue, they're not gonna spend money on advertisement. So to say that somehow advertisement has been has been up, it's laughable to me. It's just like lying through your teeth here, right? In my opinion. So I don't know what world these people are living in. Again, with this type of company, look at the balance sheets is pretty solid. I'm not saying that they're going out of business anytime soon, but for you to 10x this company or even 5x is labor intensive, you guys. Okay, so it's not very very good. Now, if you have billions of dollars already, parking money in these type of company is stable, right? You want to keep your money, keep your wealth. Obviously, you want to invest in this type of company. You don't want to risk too much, right? You want to kind of leave your money, but these people wouldn't even want to be in here. Rich people have been buying treasury bond like crazy. So because it's low risk, it's 5%. That's all they need. $1 billion, 5% is a lot. That's $50 billion. That's $50 million every single year on $1 billion, right? So let's do that math. $1 billion times what is 5%, right? Right now you could get 5% on the 1 year, okay? So that's $50 million. Just park your money in treasury bond, right? So why would they risk their money on this stock, on this type of stock at this price? No. So they're not gonna make that choice. But of course, they want retail to jump into this. It's a surprise to me that they're actually paying more taxes than the other company that we looked at since. So, man. Oh, man. Okay, you guys. I'm gonna end the live stream right here. And on that note, I'm so sorry about my dog here being very distractive. But I'll see you guys later. Okay? So, but before I go, just be careful. These type of company that they push right in front of you is not, at the very least, take a look at it first before you invest and do your own research, right? All right, guys, that's all I have.